So I want to welcome everybody here for taking time off your busy morning, and I know for most of you weekends are time off, and being right here, it means that you guys are determined to make money, okay? Am I right? Okay, so welcome to today's presentation, and today I will share with you some facts why swing trading earnings season is for savvy traders. But before we continue, please take a second to read the risk disclaimer, and basically all the information that we're offering here today and from our materials is for educational purpose only and should not be construed as investment advice. So if you guys really seek financial advice, please consult with your broker, financial advisor, or your financial planner. Okay, so thank you, Reed, for the amazing presentation. I just want to make sure that everybody, we're on the same page here and why you should be listening to me here today. I am a professional trader and have been a professional independent trader for the last 10 years, trading equities, futures, and currencies. I'm the founder and CEO of TradeOutloud.com, which is a trading education company. It's located in Detroit, Michigan. We do a lot of live events here in Michigan, and throughout 2015, we will expand throughout the whole country and abroad. And I have over a decade of investment banking experience prior to switching to full-time trading. I am certified from numerous financial institutions throughout Europe and U.S. I do run a managed accounts program for a group of high net worth clients. And I also run a swing trading and investing signal service for stocks and ETFs. So basically here, I'm copying whatever I do for the managed accounts program. Here's your carbon copy right here, delivered right to you. And like Reed said, I'm the designer of a proprietary trading system that is super simple. I am into keeping trading super simple and not with a lot of overload of information. So price support resistance is key. There is supply and demand correlated with trigger times. It is so important to be in front of the computer at the right time. And for those of you that are day traders or swing traders, let me share with you here today that there are only 4 major times when you can actually initiate trades if you're a trend trader. Also, chart correlation, it is very important to be in sync. Your lower time frames with your major time frames, they have to be in sync. Your stocks need to be in sync with the major market indices as well, and that is the key to success. And also a strict set of trading rules. I am a permanent contributor to some of the financial media outlets that are here, and these are just only a few of them that I contribute to. So you're going to ask yourself, why should I listen to her? Why should I follow Trade Out Loud? Okay, so here's the thing. We are the most trusted education and coaching program for the last 5 years. We have an excellent record of feedback from our worldwide traders, whether it is education or signal service. And let me share with you guys one thing. For our signal service, 98% of the subscribers that we have had since 2011 are still here with us today. So that means that they love what they're doing, and not only that, they love what we're doing, not only that, but they're making a lot of money. So we're really on top of the markets. So for over 10 years, we have over 10 years of professional trading experience with a proven track record. So guys, we have a proven track record. We could go back in time and we can show you the good and the bad. We can show you all our trades, the good trades, the bad trades. But overall, we have beat the S&P 500 for the 4th consecutive year in a row since the inception of the Active Investor Signal program, since we offer transparency to public. So there you have it, public third-party verified track record. This last slide is from December 5th. We are still I would say in a lot of trades, actually over 10 or 12 trades at the moment, so these are not computed into the system. But as you can see, we have a batting average right here of 77%. Right now, we're at over 79% batting average, so you can imagine that we're making a lot of money. We're picking winners, so we know how to pick them. And not only that, but the average gain right now is over 3.2%, so that is per trade. Also, this year, last year for 2014, we have managed our account, our return on investment is of over 34%. So guys, if you have you know, I don't know, just top of my head, $100,000 account, your account can be up $34,000 at the end of the year with us. Okay, so again, as you can see right here, we take long positions and short positions as well, and we beat the S&P 500 for the 4th consecutive year in a row. So, guys, if you want to stay in touch with us, remember, if I really don't get to answer all your questions by the end of this session, please send me your question to info@TradeOutloud, and I will personally take care of it. You could also follow us on Facebook. You could also follow me on Twitter, and of course, you can read more about us and what we do in our programs at TradeOutloud.com. So, guys, here's the agenda for today. So, earnings season explained. It's also known as gap season, and some of you know that a lot of traders are very scared of trading gap season, or if they're not scared, they lose a lot of money. Just remember one thing, guys: the first hour of trading from 9:30 to about 10:30 is also called as the amateur hour, where most of the traders, most of the beginner traders lose their money. So here with you today, I'm going to explain just a few tricks on what to do to stay safe as a day trader, even as a swing trader, because that is even more important than being a day trader, because as a day trader, you're in and out. But as a swing trader, what happens if you're going to have earnings, if you're in a company like ABC, and ABC is going to report earnings the next day, and you're still in that trade, okay? You might be in for a big surprise, and your account can be up, and if you're in a long position, let's say, and the stock price gaps up, so you're going to be good. But what happens if it gaps down, okay? And it goes way past your stop loss level. So that is the problem. So I'm going to share with you today what I do to stay safe, okay? To be on the safe side and always profit from these kind of gaps. Okay? And I'm going to share with you also how earnings reports influence your swing trades. Another topic that we're going to discuss today is how to make money in earnings season. Some tips and tricks. There are only 10 tips that I'm going to share with you that are going to keep you on the safe side, and you're going to profit from them. And then we're going to switch to charts, what I love most, and I'm going to show you the game plan for the upcoming earnings season. As you all know, on Monday, we're going to kickstart earnings season with Alcoa that is due to report earnings after hours. Okay, guys, so earnings season explains. Here it is. So as you can see here, I have a good representation of this tree that represents the 4 seasons, represents the 4 quarters of the year, okay? Winter season is the most traded season of all, and for the winter season, you have to be very active. Most of the traders, myself included, make most of the money in this quarter. It is easy. It is like taking candy from a baby, okay? It is super, super profitable. You have a lot of events that are contributing to the success and the follow-through in this season. So you're going to see follow-through coming at the beginning of the season when earnings season kicks in, and you're going to have follow-through even towards the end of the quarter when earnings season winds down a little bit, so you don't get a lot of dynamics, you don't get a lot of momentum in the market, because not a lot of companies are due to report earnings. But that momentum is kept alive through cornucopia trading around Thanksgiving, and that is a great, terrific trend trading. And as always, we did have a beautiful trend develop this year. You have Santa Rally, you do have window dressing, you do have January effects, you do have a lot of effects into place that carry in the market for a very, very strong end of this quarter. Then you have spring season. This is basically, you know, the first quarter of the year. So basically what happens here is that everything comes to life and you get a lot of follow-through momentum. But guess what? At the, towards the end of the spring season, towards the end of the summer season, and towards the end of the fall season, you're not going to see the follow-through that you see in the last quarter of the year. And why is that? Because each trading season is divided into 2. Now, I'm not talking about the winter season. I'm talking about these 3 seasons right here. Okay, they're divided into 2. There's a very active season, which is the earnings season, when you're going to have financials report, when you're going to have all the tech sector report earnings, and that, tech sector, because such a big part of the Qs, being such a big part of the market, it's really going to create that fluidity. It's going to influence all the stocks within its sector. I'm thinking of a stock like Google or Apple. When they report, of course, they're going to influence the market a lot. So that's why you get a lot of follow-through on all the other trades that you're in. So if the market, should gap up and will continue higher on, let's say, and Apple has really good earnings or Google has really good earnings, you're going to see those fingerprints all over the market and the market indices, and that's going to power up all the stocks that you may be in, even not related to the tech sector. Okay, so that's very important. This is what I'm going to share with you today. Okay, so all of you know here that we're going to concentrate all our most active trading in the beginning of each quarter, right? Exception being the last quarter, where we're going to capitalize on each and every single week of the quarter, right? So earnings season reports equals wild price swings. So what does that give us, guys? It gives us opportunity to make a lot of money, because you get that fluidity. Now, how many times have you been in a trade and that trade is not going anywhere? It's like watching paint dry. It's slow, it's sluggish, it's not really, doesn't have that oomph to get it to target 1 level, never mind that target 2 or 3, okay? Have you ever thought, and have you ever, thought and, take some time and think, why isn't this stock moving? When am I trading this stock? So if you ask yourself some of these questions, you're going to realize very quickly that you must have taken this trade towards the end of the quarter. That's when you're not going to get a lot of follow through, right? So you're going to capitalize from most of the swing trades and most of the day trades on the very, very active season. And therefore, this first quarter and earnings season is going to offer you your watch list, your particular watch list for each and every single day, those being the gaps. Okay, so earnings season, also known as gap season. Okay, so like I said, guys, if you are not really trained and educated to trade gaps, then you should stay away from them. And if you're a really beginner trader, you should try to alleviate and trade the first hour and then step into the market after 10 o'clock, after 10:30, when the market and when your stock has chosen a trend. Okay, so that is called trend trading. That is being said, you're on the safe side of things, of the market, and the safe side of your stock. So if you're an active trader and if you know what you're doing, if you have experience trading for at least 6 months to a year, then you could go and tackle the gap season, which is extremely profitable. Don't get me wrong, you can still profit from gaps in trend trades, okay? So you can still capitalize on trading those morning gaps, but trading them after 10:15, after 10:30. Okay, so earnings season is a period of time during which a large number of publicly traded companies release their quarterly earnings reports. For those of you that are new here, you might not be familiar with all these concepts, so that's why I felt the need to describe everything. So earnings season reports begins in January. So like I've mentioned, we're going to start next week, actually on Monday, with Oakland that's going to report earnings after market close. Then it's going to be April, July, and October. These 4 months also represent the 4 most active months of the year. That is because a lot of companies report earnings right at the beginning of these months. Okay, so here it is. Earnings season brings great opportunity for momentum strategies. Like I said, you have to have that fluidity in the market. You have to have that follow through in the market, so your stocks reach your targets with ease. That is the main thing, because you don't want to keep your money locked and blocked in a trade that goes nowhere. Okay, you want activity. You want to get in a stock. You want that stock or ETF to reach your target 1, 2, 3, 4, or what have you, and then you'll want to move on to the next one. You don't want to be stuck in a trade that does nothing. So this is the key, guys. Keep your trading very active in this first quarter, in the first quarter of each season. The next thing is that setups are being developed before the opening bell, and according to where price is positioned, there is the possibility of a trend trading action. This is what we aim for in swing trader, and this is also what we aim for in day trading, guys, because once you get strong earnings from a company, okay, most probably, and it's not 100%, it's not 100%, but most probably the stock will gap up. The price is going to gap up, and it most likely will continue the trend. Okay, now we're going to take a look at some charts a little bit later on, and I'm going to show you what to look for. So it's not always, the key just to have your entry, your stop, and your target, but you have to consider the timing of the day, and also you got to consider the timing of the quarter. So look at the big picture and look at the small picture as well. Also, entries and setups can be found on small time frames that are intraday charts with smaller risk and higher odds of follow through. So this is key, especially for those of you guys that are swing traders. You can capitalize on this to the max. You could get entries as close as to 5-minute or 15-minute charts, and you could have those stocks that are likely to hold through your swing trading moves, rather than taking a trade based, like, textbook, based on the daily chart or based on the hourly chart. So therefore, you can zoom in, have smaller stops, and have multiple R's instead of having 1 or 2 or 3 or 4 R's. You can capitalize on this and have multiple R's. That is reward units. So meaning you can have a 7-hour trade. That means, like, if you risk $100, you can have a reward of $700. So setups, remember this, for those of you that are swing traders, especially in earnings season, look to capitalize on smaller time frame entries. These are key, guys. 15-minute charts, sometimes even the hourly charts, offer you amazing opportunities. And even for those of you that are using 30-minute charts, I'm going to show you a layout of my platform, and I don't use those. I don't use the 30-minute chart, but then again, if that's what you prefer, you could go by that. But again, smaller time frames, 15-minute hourly chart, that's the way to go for, especially for this active season. So like I've mentioned at the beginning when I showed you the picture of the tree, okay, there are 2 basic seasons within the big quarterly season, within the big quarterly report, right? So I talked to you about gap season, which is a very active season, and then there's the non-gap season when only a few companies report earnings, and those are not catalysts for moving the market, and that is so-called the passive season. So we're going to talk again today about active season. So things that you need to do and things you need to capitalize on. First of all, what you need to do is stocks reach targets easier. Whether you're a day trader or whether you're a swing trader, you're going to see that you're going to profit to the max. This is also a good opportunity for those of you that are position traders, that are mostly investors, to look for entries. So this offers a great environment for finding amazing trading opportunities. Also, you have extreme follow through. What that means is that you're going to see your stocks, your ETFs that are going to run faster, quicker to your target areas. And I'm just to mention here, guys, that if you're not, let's say, a stock trader, an equity trader, you can also apply this to your futures trading, okay? If you're trading future indices like mini NASDAQ, mini S&P, mini Dow, just remember, guys, this is the way to go. And whether you're a day trader or you like to swing trade in mini indexes, this is the way to go. You get that extreme follow through. Where in the last part of the quarter, you're not going to get that. You're not going to get that push behind it. Okay, so you get that ease in reaching targets, which is so important because you're not going to get stuck. You're not going to get bored in a trade. I remember there was a time many years ago when I first started trading, and the stock that I was in or the E-mini that I was trading was not getting that follow through, and I didn't understand why. It was just like watching paint dry. I would get even in a scalp, and I would be in that scalp for hours and hours on end. So Not a very good thing to do. If you're a scalper, you want to go in and out. You want to benefit from the rapid moves, and this is what is going to give you that rapid move, okay? So in this time, in this active season, you're going to have that rhythm, that momentum in the market, and that's going to create more trading opportunities. And guess what, guys? Most of the trend is going to continue. Okay, so you're going to see that usually at the beginning of the quarter, if you have a major trend set in, for example, like we are right now in a really monster trend, okay, in the major market indices, okay, monster trend, you're going to see that that trend is most likely to continue if earnings from these companies are going to continue to be good. So that's going to push the market even higher and higher and higher. Now, I just want to share with you guys that you all know that usually bull markets last for about 5 years. We have been in a bull market for quite about some time now, right? But we're getting close to that 6th year. And there are a lot of analysts that are thinking, okay, is this trend going to continue? Guess what, guys? My answer to that question is yes. As long as we're going to have strong earnings from these companies, we might get into a continuation this year as well. And why is that? Well, think about it. Next year is election year. Usually election years and pre-election years are usually bullish. So this trend has odds to continue. But guess what, guys? This year is not going to be typical like last year or the year before. It's going to be the year for day traders and for very active investors, for very active swing traders. It's not going to be for those position traders. So guess what, guys? Hedge funds, this is going to be the year for hedge funds. This is going to be the year for active investors that know how to capitalize on these 2 seasons. Okay, so therefore, you're going to look for entries, and you're not going to get married to that stock. You're not going to get married to that ETF. You're going to benefit from it. You're going to take that swing trade, and you, at the first sign of reversal, you're going to be out. You're not going to wait for the dips, and you're not going to wait for, especially in swing trading, for trailing on the daily charts. Okay. So you're going to go into a more rapid kind of environment, and we can see that, and we're going to take a look at the cues if we have enough time today. I'm going to show you exactly what I see for the cues moving forward into next week, okay? So there's one thing that you do not want to do, and what is that one thing that you really do not want to do? And that is take a swing trade ahead of earnings, guys. You don't want to do that. If you're a swing trader and if you want to get in a swing trade ahead of earnings season, that is a big no-no. Okay, we're going to detail it a little bit later on, but let me share with you guys one thing. I get a lot of emails, okay, from potential subscribers asking me, okay, what is your plan? Okay, company ABC is going to report earnings tomorrow. What is your plan for this? I'm in this trade. And my plan is, and my answer is, you shouldn't be in this trade, okay? So not unless you're like, you know, you're in a position trade, okay? You own it in your IRA and you're looking to hold that for, you know, at least 8 months or a year or 2 years or so. But other than that, you should not be. If you're an active trader, if you're an active swing trader, meaning you're willing to hold positions anywhere from 2 days to a couple of weeks or so, you are not going to do that. You're not going to take any type of swing trades at least 2 to 3 days before it reports earnings. And why is that? Because you don't want any surprises, okay? You really don't want to have any surprises. So guess what, guys? My entry for my stocks are after earnings season. So I wait patiently for earnings season, and afterwards I look for the perfect setup, and then I hunt for my perfect entry. I determine my stop that is most likely to hold through any kind of pullback, so it's a hefty area. I usually base my stop areas on support resistance, and that's major support resistance areas, and then I calculate my projected target. But never do I initiate a swing trade. For instance, Alcoa reporting on Monday right after close. I'm not going to take Alcoa long on Friday or short on Friday. I'm not going to do that. Or I'm not going to do it on Monday. Okay? I'm not going to do it even if it provides me a perfect entry for a long or a short, I am not going to take that trade. I will wait for Alcoa until after it reports earnings. And we're going to go over Alcoa to exemplify. And you can see for yourself on Monday if I was right or wrong, okay? Okay, and there's this non-earning season. We talked about the active season, and we're talking about the non-active season. Just remember, we're going to start right now with the most active season, guys. So be very aware the first month is going to be super active. Now, there's non-earning season, basically non-earning season. There are still companies that are due to report earnings, but it's more like the passive season. There are not a lot of catalysts, and not a lot of these companies really influence the market in one way or the other to move higher or lower, okay? So this is so-called a non-gap season. You're not going to see a lot of gaps into the market in this kind of in this period of time, and these are some things that you can expect in this latter season. First of all, stocks have a very hard time reaching targets. Now, remember, guys, even if you're a day trader, if you're a swing trader, if you're not focusing on a trade that gaps in the second half of this, in the second half of any quarter, you're going to have a very hard time for that stock reaching targets. So just remember, you're going to have a very hard time. It's just like watching paint dry, and I'm sure this has happened to many, many, many of you, okay? Now, there is also a lack of follow-through, so you're not going to see that off behind every kind of stock that is going to make it go to target levels. It's going to have a really, really hard time reaching those areas. Also, within this period, you're going to focus on unique trades. So if you're not going to focus on gaps for that particular day, if you're not going to have a lot of companies, major companies that are going to report earnings, then you're going to try to find unique trades that are already trending and that are trading into a void so they can have that follow through higher. And of course, remember to always correlate the trade, the stock that you're trading, correlated with what the market is doing. And what I mean by that is that if you are in a weak stock in a very strong market, that doesn't have odds of following through higher. So what you're going to do, you're going to pick strong stocks. You're going to go ahead and do a lot of scanning in this time because, you know, time will allow you to do that. So you're going to pick the strongest stocks from the strongest sectors, and then you're going to see in a very strong market environment, and this is what you do in a strong market environment, and you're going to pick those strongest ones for longs. Why? Because they have the power to follow through even in this latter part of earnings season faster, okay, to your target areas than the market itself. And the same in reverse. So you're going to, in a weak market environment, what I mean by weak market environment is that when you know, you're seeing the Qs, the SPYs, the major market indices down, or you're seeing that as lagging and enter into a confirmed downtrend, you're going to go to your very weak stocks. And you're going to pick the weakest stocks from the weakest sectors, and then you're going to take them short. So these are unique trades and unique scanning opportunities and trades that you can take with the market, and especially these are strategies that you're going to use in the latter half. Of course, many of these you can use right now in any market condition, just pairing your stocks and whatever the market is doing. So so within this period into the non-gapping season, you're going to see that sometimes, and this is most of the time, the market will enter that correction phase. Pullbacks are more likely to happen within this period than at the beginning. So at the beginning, you're going to see a power trend in the market, and in the second half of the quarter, you're going to see pullbacks. And you're going to see buying dips again, and you're going to see more likely pullbacks and correction phases, and you're going to see a lot of ranges develop as well, okay, in stocks, in market indices as well, okay, and you're not going to find as many trading opportunities as well. You're not going to find those. Sometimes, you know, I look at the market on a Monday or a Tuesday, and I don't find a lot of opportunities, especially in non-earning season. And guess what? You're better off not trading than trading. Trading less, guys, is sometimes more, so you have to know how to correlate. Be overly aggressive. I'm not saying to be overly aggressive, but be most aggressive in the first part and be a little bit more conservative in the latter part. Okay, so here are some examples of some charts, and this is one example, and this is SONC, and it had earnings on January 7, and as you can see right here, this is the daily chart and this is the 15-minute chart. I just wanted to show you exactly how you can influence your entry. Okay, so here it is, guys. Price gapped up above daily resistance level, above the whole number, psychological number at $28, and it gapped up. You can see that it reached a high of $31.59, very close to, again, $32, and it pulled back, right? So let's take a look at the 15-minute chart where you can actually see the trader psychology and what happened within this. So after reaching this high, the stock pulled back, developed its own support level, the gap up support level, which is very important to master, especially if you're a gap trader. You have to look at location, so location is everything. So you can see right here that it just based, okay, it just based right here, okay, very, very powerful. Look at the base between sandwich between $29 and $30. So I just want to pull the chart real quick of SONC, live chart that is, and I'm going to put it for you on the 15-minute. Let me just drag it for you. Okay, now here the gray area is the extended overnight trading, but I just want to show you guys, let me just take this off, okay, because many of you might get confused by this. Okay, this way, this is what we were looking at. This is the 15-minute chart. Okay, you can see it right here. You can see the big spike, 31.59, and pullback. You can see the gap support right here. You can see it right here throughout. I created the shelf of support right here, and then it popped over $30, and this was like our game plan. If it pops over $30, it has odds of continuing to $31 and $31.59, and it does have projection to continue higher. So look what happened here, guys. It just popped up to our first target area, so just about 1 hour profit right here. So if you would have risked $100 on this trade at $31, you would have capitalized on a $100 move. But don't forget, this is a swing trade, so we're expecting more to come from this stock. Now remember, we did have a little bit of pullback in the market, and of course, you know, pairing this actually pulled back as well a little bit, and then we created it created a little bit of a pop to the upside, but nevertheless it didn't stop us out. This is our stop level right here, $21.20. So this is just to show you the power of the gap and how you should be looking at a gap. Okay, and just remember, guys, we're not getting a lot of follow through because we're just starting the quarter next week. Okay, here's ANF. This is another gap that has happened here, and ANF, you could see, remember, pair your trend to whatever the market is doing, and remember, do not take a trade long if it is really in a downtrend, because that move is not likely to create a lot of follow through. You really don't know where your target area is, so you cannot fully benefit from the fluidity of the move. So this is pre-earnings downtrend, so I had a major downtrend. This is what I mean, guys. If you would have taken this buy setup right here, if you were in the money, okay, let's say you're a day trader, you took this trade right here, or even a swing trader, you took the trade right here, this entry price right here, this is your stop. If you did not get out and maximize on your 3-day move right here, or rather 2-day move, this is what would have happened to you. It gapped down below support right here, and it continued lower, and then this is it, guys. You did not have any chance of getting out with money. Okay, so just remember, guys, do not stay in a trade ahead of report. Okay, so this is clock right here. It had an extreme uptrend, and then again gap down. It's basically sandwiched now between support resistance right here. You can see pretty much like whole number areas. 74 and 74 for resistance and 65 for support. And guys, right now CLAC is just in nowhere land, so not trading CLAC until it reports earnings. So after it reports earnings, if it should gap up above, so this quarter, this upcoming quarter, if it should gap up above this resistance area, I'm going to wait and see how it reacts to support, how it reacts to the new support that develops from an eventual gap up, and then we can see targets of about $84.21 and even 85 and into the 90s. But if it will gap down, it means that it had bad earnings, right? What it means is that if it gaps down, I will consider this as a weak trade and will consider shorting this. Okay. Another example, this is the extreme trend for CLAC, this the trade before. Remember to pair all your and to correlate all your time frames to the time frame that you are trading at. And remember, very strong uptrend, but this is key right here, $65. The more it remains weak in this area and the more it will break the $65 area, this will be a short opportunity. Right here, even in this very, very strong uptrend. But if it comes with bad earnings, and if the market is going to start a correction phase, a breach of $65 can mean a continuation lower for CLAC. Okay, here's another example, gap in Oracle, gapped above resistance, well above resistance right here, above the $43 area, and it continued higher, okay, and it continued higher. Okay, if you were long anywhere from here, this would have been a really great surprise for you, but I hate surprises. So guess what, guys? Even if I was in from any buy setup that would occur on the daily chart in Oracle, I would have been out around here, okay? I would have been out, or at the first sign of reversal, like here, like so, under $42, I would be out. I would wait for news or earnings or rumors or what have you, because you wait for these whisper numbers and you wait for the next day. So the next day it gapped up. You can capitalize on this. You can see that this is the daily chart, so you can capitalize on 1, 2, 3, 4, even 5 days before the turnaround. Remember, the first time the turnaround for swing traders, daily chart, this is the way to go. Okay, if you are in a position trade, then you're willing to lift from the pullback and then perform a trailing stop. Here's an example right here of an intraday entry opportunity on that gap up in Oracle. Here's the price. Here's the gap up support price. Here is your entry. And here it is, guys. This is the first reversal sign. You can be out right here in this area. And if you're a swing trader, you can actually apply you could apply damage control right here, and you could actually be in this trade, okay, because this is not a huge move. Here's another example with TRIP. This is a very strong downtrend that is happening right now. You can see, remember what I told you at the beginning of the session, that most of these stocks right here have the tendency to base before it reports earnings, okay? So here it is, big surprise, gap down, and right now it's in the nowhere territory. So on future earnings, if it should continue lower and it breaks the support level, it has odds of continuing lower. But if it breaks this base, this can mean a reversal. So here are some conclusions, guys. To this constant release of earnings reports, stocks have a much greater likelihood of rapid price swings. Market reactions create incredible volatility that you have to absolutely profit on. Even companies who haven't yet released earnings reports are vulnerable to the frenzied price action, like I've mentioned at the beginning of the session. And stocks do not always gap up on good earnings and do not always gap down on bad earnings. So sometimes they remain flat. And to successfully trade earnings season, you need proper education and money management, okay? So here's 2 rules, guys, that you have to take into consideration when swing trading earnings season. First of all, if a company releases positive earnings reports, it does not necessarily mean that the company's stocks is going to go up or down. And there are external factors that you need to compute, like price movement, price action, support and resistance areas, earnings performance versus analyst expectations, and performance comparison to industry competitors. And why is that, guys? Because day traders and swing traders make money from the volatility created by these reports, okay? So profit potential for investors and traders correlates directly with the fluctuation in price. That's why gaps are so important to trade, especially beginning of each quarter. So, for example, guys, this is rule number 2. Wall Street hates surprises. So do I. That's why I get out of trades and I don't take a swing trade ahead of earnings. So let's say 5 out of 5, and this is just an example, 5 out of 5 market analysts expect losses for a company that is due to report earnings the next day or the next week, right? So when the company reports earnings and it matches those expectations, there's no big deal and no surprises, so that's good for the market, right? So when the earnings report matches expectation, there is no surprise. So no surprises it means good for us. So guys, how are you going to make money this season? Well, there's 10 easy steps. First of all, you got to scan for companies that have a good track record for releasing positive earnings reports. Once you have selected those companies, put them on the list and watch them after they report earnings. Look at the technical picture. Remember, support resistance is key. Never initiate a swing trade ahead of earnings, at least 2 to 4 days. Wait for the earnings report. Watch the initial reaction on a minor time frame like I showed you on the 15-minute chart, and time to play ball. Define your entry, stop, and target. Position size according to your account. Take the trade and have a money management in place, okay? So let's talk stats, guys. I just want to show you real quick Alcoa on the daily chart, and we're going to wrap it up here. Okay, Alcoa, guys, pending. This is a strong stat, had an amazing 2014, but guys, this is my game plan for Monday after earnings and rather for Tuesday morning. If it should gap up above $16, this is going to be a buy for me, and I see targets into $17 and $18 and even $20 for Alcoa. So this is going to be my game plan. If I should have a gap down around this area, $15, I'm not going to do anything on it. But on a break of $16, on a break of this resistance area, I'm going to look to take this long. This is just a listen. You're going to receive the recording from this class here today. You can take a picture of this and watch these earnings reports for Monday, Wednesday, and Thursday. Okay, so guys, I'm going to wrap it up here. If you want to follow me, if you want to learn from what I do on a day-to-day basis, I run a very successful swing trading signal program. I'm going to offer you 30 days for $49, $49.99 for the first month. Then you can lock in $99 thereon. So our regular subscription price is $149. You're going to get real-time traded alerts with entry, stops, targets, and complete management. It's going to be a hand-holding system, so you're not going to do anything, just take the trade. Two or 5 swinger position trades per week, real-time updates on market conditions. You're going to get a detailed newsletter every single Monday, pre-market, with the most important things, and of course, that's going to come with the first trade of the week. Plus, guys, you're going to get a 1-hour strategy mentoring session each week, and we're going to have very interesting classes coming up. We're going to talk about Fibonacci's. We're going to talk about damage control. We're going to talk about trends. We're going to talk about optimum entries and stops. So therefore, guys, this is an only 48-hour sale. It ends on Monday. I have only 50 spots for this class. Remember, you can register by visiting tradeoutloud.com. You are going to have more explanation on what the program offers there. Remember, $49.99 for 30 days to test drive and to make money. Okay, thank you so much, guys, for having me here today. Okay, I think I'm ready on just on time. It's 11:29 here. Guys, if you have any questions, just remember, email me at info@tradeoutloud. I'm more than happy to answer all your questions. And I hope you have an amazing, prosperous 2015.